Let's react.
It's earnings next week. Jefferies downgrading the stock to underperform, warning of weak iPhone sales, and expecting a fourth quarter revenue miss.
Yeah, this is brutal for Apple. I got to be honest with you guys. Really, really brutal for Apple what's going on here, because you're seeing the market with so much momentum, and just Apple just can't go up right now. It just seems like it's going down and down and down. So Apple is down so far this year around 9%. Brutal. And IWM's up about 4%, Dow's up 3.8%, S&P 500's up 3%, Qs are up good. So everything's doing good, but Apple is just... And guess what? I'm hearing something else around Apple. You know what it is? I'm hearing that people aren't interested in Apple's whole Apple Intelligence thing. And who's the guy that predicted that like over 6 months ago, right? Everybody was, oh, Apple Intelligence, blah, blah, blah. It's going to create this big thing for iPhones. And who was like telling you guys like, no one cares about this, right? And now all of a sudden people are like, oh, yeah, people don't care about Apple Intelligence. If you would have watched my video 6 months ago, I already told you guys that.
Loop Capital moved to hold from buy, also citing iPhone demand concerns and softening prices. Joining me now with her take is Needham's Laura Martin. She's got a buy rating still with a 260 price target. She also covers Meta and Netflix. Netflix reports after the bell today. Laura, welcome a lot.
So wait a minute. The same lady that's got a 260 price target on Apple has an underweight on Meta? Stop it.
To run through, but first of all, has the bar now been lowered enough for earnings for Apple, do you think?
Nope. Don't think so. They're saying iPhone demand in China is down 18% year over year. That's 20% of their revenue. So we need to hear from them. More importantly, I think people were buying iPhone on the generative AI cycle. It's been buggy, and now it looks like they might not be able to get chips for their next generation of iPhones. They only release an iPhone once a year. So if they can't get the right chips, then the next year's AI will not be good, and we'll have another soft year for iPhone sales, which will make people run for the hills from Apple. So I think concern's still out there for Apple.
But you're not concerned?
But yes, she's got a 260 price target. Like, it's why it's so hard for me sometimes to take these analysts serious. I'm like, but here's the deal, okay? And this is why I told people, how's Apple going to be super successful in AI when they're not spending the money? Like, you can clearly see in CapEx numbers. It's not like this is some hidden thing. No. Everybody can see in the CapEx numbers who's spending the big money to advance their products and services to be successful in AI. And you know who's spending the money? Meta's spending the money, Microsoft's spending the money, Amazon's spending the money, Google's spending the money. Everybody's spending the money except one company, and that's Apple. They're the ones that are lagging massively in anything AI related spending. Like, they're like throwing a crumb at it. They're like, you guys are hungry, here's a crumb to eat, right? And all these other guys are spending ridiculous budgets. We're talking about these other companies are spending $10 billion plus a quarter to advance their AI initiatives. And then Apple's over there like, here's a penny. What is going on, Apple? What is going on? So, it's kind of hard to be successful at something if you're not going to spend the money.
Enough to join the raft of downgrades.
My opinion is Apple, what they're just trying to do as far as AI, and I think the only way they're going to be successful in AI is they're just going to get their 30% cut, right? They're going to hope there's going to be a bunch of AI apps that pop off over the next few years, and then they're going to try to squeeze those guys for their 30% fees for being on the App Store. That's what I see in regards to Apple and AI.
Yeah.
Okay, we'll see what happens in earnings. I was trying to get the Genmoji to work, and I was just like, I don't have the energy for this. What about Meta? I mean, we've seen a couple of big policy flip-flops. The stock has done pretty well. I always feel like there's an AI component to that, just kind of optimizing ad load. Maybe it gets a boost from TikTok going dark, even as it was for a few hours.
Yeah, and frankly, because it's unclear that the executive can overrule the Supreme Court, the TikTok app is still not available on iPhones or Android because, there's no clear precedent that they can't get sued if they actually listen to the executive order because the executive branch does not make laws. The legislative branch and the Supreme Court upholds laws. So right now, whether or not he won't enforce it for the next 75 days, the lawyers at Apple and Google are saying, no, the Supreme Court says we can't put this on. We're not putting this on.
Absolutely.
So that's bad. Good for...
Yeah, but for people that already have it, from my understanding, like, they're good if they already have it.
That's good for Meta, and it's good for Shorts.
I hate this. I hate all this, this is good for Meta, TikTok. Meta doesn't need any help. They don't need any help. They're doing just fine. TikTok, no TikTok, pock. It doesn't freaking matter, okay? They're making bank over there. They're going to make a lot more bank. It's not complicated. And so I hate this whole people are playing on, well, is TikTok going to get banned or not banned? And trying to play that as, being bullish or bearish on Meta stock. And I'm like, it doesn't matter. It just, Meta's good. Regardless. TikTok's here. And guess what? Meta's doing just amazing with their numbers. I couldn't be a happier shareholder. So anybody trying to get bullish or bearish on Meta based upon what happens or doesn't happen with TikTok is making a massive, substantial mistake.
In the near term, we'll see whether TikTok, I'm shocked they didn't have a plan B, because this has been going on for 4 years since Trump suggested the ban 4 years ago. They should have had a plan B in case this happened so they could keep operating.
I haven't checked lately, but earlier you couldn't get TikTok in the Apple Store, Apple's App Store and the Google Store, because telling the AG not to enforce it is different from saying, the laws changed. Yeah, that could be a near-term boost at least. What about Netflix? Now, there is a TikTok angle here as well, because evidently, as my producers have said, promoting shows like Squid Games in the past, a lot of that traction, a lot of that virality was literally happening on TikTok.
Yeah, younger, right? So what it does is it moves to Instagram Reels, which is a Meta property, and it moves to Shorts, YouTube Shorts, which is a Alphabet property. So it just gets moved. And by the way, there's a new Chinese app that a lot of the kids are moving from TikTok to. And so
she's got an $800 price target on Netflix. What? Netflix is going to be $1,000 tomorrow. What in the world?
They will find a way to get
it's
shows.
20% downside.
This might be a 2 or 3 week disruption. And then TikTok becomes irrelevant really fast, because once the audience moves, they don't go back. They find a new place.
The algorithm.
People love TikTok. The TikTok people, they love TikTok. Okay. So, don't count on that.
Is still just so much superior. I don't even know how to find YouTube Shorts. I assume it's on YouTube somewhere. What about the
exactly? YouTube Shorts, stop it.
Results after the bell today for Netflix? What would you be watching for?
So definitely looking for ads, 8.9 million sub ads, and where they come from and the ARPU. So the average ARPU we want to see is about $11.70, which is a weighted ARPU. US ARPU is about 2 to 3 times the rest of world, depending on region. So we want to see ARPU holding up and any announcements that they're raising price in parts of the world. That's good for Wall Street. Also that their ads aren't slowing down. Also the ad tier, because we want the ad tier to make more money than the subscription tier, which every other service that happens, but not Netflix. So we want to see them closing the gap between the ad-driven tier and the normal subscription tier. We want to hear a lot about, and also ad tier additions. Yeah. We want to hear that too.
So I should have asked you, why is Meta still an underweight for you if it is? I think it's the only one on your coverage list.
It is. Yeah, Meta's still an underweight for us because we're really worried about this generative AI. If you look at their capital spending profile, it is going up 50 times faster than Amazon's and Alphabet's and OpenAI/Microsoft, because they're starting small and they're going to try to compete in this really unknown kind of, in addition to the metaverse, which they haven't shut down, they're now going to try to compete with the big boys in large language models. And they don't have a cloud, so they're paying third-party rates for their cloud infrastructure, all of which is expensive.
Whew, I mean, come on. What are we doing here? Here's the deal. You can make the stock market much more stressful and confusing than you want to make it, okay? Here's the bottom line. Meta trades at a 24 forward P. Slightly above market average, we can call it. And I mean very slightly. Meta is a double-digit top-line, bottom-line grower for years to go in the future. And you're paying roughly a market multiple for it. Give me a break. Meta is going to be $800 to $1,000 this year, regardless of the spend. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year
2-year out forward PE ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
What are we looking at here? So Meta, to get started with Meta here, I'm looking to potentially, if Meta goes on a nice bull run here, let's call it over the next 6 to 9 months, and let's say makes a move to kind of like that $800 to $900 range, right? I'd be looking to cash like 200 shares of Meta and put it into some of the weaker positions in this particular portfolio. The thing that's tough with Meta is the valuation is still very, very attractive. And even when the stock does make its move to $800 to $900, it still won't be necessarily an expensive stock. And that's why I'm not looking to cash out many shares of the stock. Like if you told me Meta was to go to $1,500 a share this year, I'd feel very different. I'd feel like, let's cash more than 200 shares. I'd say, let's cash maybe 700 shares, right? And get myself down to 1,000 shares this year. But if it just moves to kind of that $800 to $900 range, I'll take some profits. I'll probably cash out like 200 shares and move it into positions that I just think are more well positioned for gains over the next few years. But it's a hard one for me to cash in any substantial way. It really is. I mean, this company's just a flat out beast. You know, oh, I think we're already on the Meta chart here. Yeah, we're already on the Meta chart. I mean, look at this, guys. Look at this. I mean, you know, 117, 120, 126, 134, 142, 149, 156. I mean, it's incredible, right? And this is where we're projected to go based upon analyst expectations over the next few years. You know, we're going to push to $200 billion plus in revenue. And remember, Meta is like, you know, we're talking about, they have the holy grail business model out there. So I wouldn't be surprised to see their margins continue to increase over the next few years. And Zuckerberg's very committed to keeping costs down. You know, obviously they're spending a ton on AI chips. We all know that. But if you look, like they're about to cut their 5% lowest workforce employees. So, I mean, at the end of the day, I think they have room for margin expansion continued over the next several years and net income expansion, right? This is where their earnings per share is right now on a trailing 12-month basis. This is where it's projected to go. There's just a lot of opportunity here. Free cash flow is building out with this one. So, yeah, I mean, at the end of the day, when it comes to Meta, yeah, looking really good there. But I wouldn't mind cashing some shares. Tesla, I'm looking to just hold Tesla regardless of kind of what happens with the stock. I'm down to 1,000 shares this one. Obviously, I've sold the far majority of my Tesla shares over the last number of time, right? And, you know, it's just been a, you know, pretty, I would say, borderline financial game-changing stock. When you got a 3,000% gain on a stock, it's just ridiculous, right? And the amount of profits I've taken over the past few years in Tesla's astronomical. So very thankful for that one, but just looking to hold that one and obviously see how the robotaxi opportunity presents itself. The thing with me with Tesla is I've taken so much in profits that if Tesla completely failed over the next 5 years, it doesn't even matter. It just doesn't. Just because I've taken so much in profits over time that now I'm just like, it's just so house money at this point in time, it doesn't even matter, right?
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward PE ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search search, SEC filings, right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
Meta. Oh boy. Okay, we're talking about big dog here, right? If you've been following me for years, which, hey, thank you. Thank you for everybody that's been, thank you everybody's been supporting me for years and years and years on the channel. I appreciate every single one of you. You know Meta's always been a stock I've loved. You know I bought it on and off for years, right? Now sitting on an $858,000 gain, does not include dividends, does not include all the profits I've taken in Meta stock over time, right? I love Meta stock. It's a beast. They've been executing exactly how I thought they would execute. Everything's been going perfect, right? If you guys got to watch this video, it looks like about 169,000 of you guys have gotten to watch this video so far. 6 stocks to buy and hold forever. What did I say in that video? I laid it all out for you guys. I said, you know, Meta's one of those stocks you buy and you hold that thing forever. In Meta's, you know, I might cash shares here and there on Meta, but at the end of the day, like, I've got to always hold a massive position in Meta. Like, until I ever see Facebook and Instagram and WhatsApp and you know, Threads and all the other products and services be irrelevant and Zuckerberg leave the company, like, until that day, like, it's one you just have to hold, man. It's one you have to hold. 4 straight double beats for this quarter, for this company. And here's the thing. Their beats are not small. $940 million beat. $231 million beat. $760. $159 million beat. But look at the earnings per share beats. 36 cents, 35 cents, 38 cents, 73 cents. That last quarter was a shocker, right? 73 cents. It's 603 EPS in that last quarter. So, here's the deal. Oh my gosh. It's in the bag. It's in the bag. 674 is what analysts have. Like, I think the company's going to be doing an earnings per share of between $7 and $8 for this last quarter. 674? I think they're way low. I think $7 to $8. So I think the analysts are going to be wrong again, and the company's going to come and smash it. And in the March quarter, $5.39. I think the company's done with the 5s. I think the earnings per share is going to keep coming in at 6s and above, even in the weaker quarters for the company now at this point in time. So I'm looking at what analysts have here, and I'm just like, you got, like, did they not learn? Like, they've been off by a mile. Did they not learn already? I guess not. As far as revenue goes, 17%, that's in the bag in my opinion. And then come on, 14.5% for the next quarter, that's super bag. Give me a break, man. Like this quarter they're about to report, their revenue growth will probably be, my guess is 18 to 21%, somewhere in that range. And the next quarter they'll probably do somewhere between 17 and 18%. And analysts have 14.5%. What is going on here, man? They'll be flipping my flapjacks. So here's the deal. If they come in quad beat, but the company does have to do one other thing. Let me be very crystal clear about this. CapEx is going to be very important. How much are they spending on all those NVIDIA chips in 2025? And the companies are likely going to give a very specific guidance range for that. If the company comes in quad beats and has a CapEx roughly around what Wall Street was expecting, we're going 700 plus after earnings. If, for any reason though, let's say there's a dynamic where company beats, great, but their CapEx is way above where Wall Street's at, and Wall Street's like, ooh, Meta, their spending's getting out of control again, it's going to be 2022 all over again. That would be a situation where maybe we go under 600 and go back down to that 500 range, which then I think the stock would still end up getting bought right back up the following weeks and months after that, by the way. But, you know, I think we're going 700 plus. I think we're going 700 plus. It's been such a beast stock for me. And I think at the end of the day, like, you just run the math, you run the numbers on this, and this stock will be $1,000 plus within the next 24 months. And the stock will be $2,000 plus before 2030. Like, it's just a number. You just run the revenue growth and net income growth in a realistic PE range. You could do that on 1000xstocks.com, right? Run your projections, and we're 2,000 plus before 2030. And we're 1,000 plus within the next 24 months. So, regardless of whatever happens, like, let me just be honest. If the stock, for whatever reason, dips, it's kind of like an Amazon situation where it's just an easy buy the dip opportunity, right? Now, the other great thing for Meta is evaluation. You look at their forward P, it's at around 25. Keep in mind, analysts are off by a mile in regards to Meta. So this is taking analyst expectations into account, which Analyst expectations are going to be far too low. Company's going to come in with way better earnings per share. So the forward P on Meta is probably a reality number, 20 to 22, right? Apple's at around 30 and Microsoft's at 33. But here's the deal. Meta's going to likely have way better revenue growth and earnings per share growth over the next 5-10 years than those two companies. So Meta should be trading at a far bigger premium than these two stocks. So if you're wondering, could Meta hit $1,000 this year? It's possible. If they come in with great numbers all year, CapEx is realistic range, right? You could get this stock to $1,000 plus based upon valuation alone this year. Keep that in mind. Keep that in mind, right? Now, as far as my end of year price prediction for Meta, I actually did that on X today. I don't know if you guys follow me on X, but I linked that in the description down there. So if you use X and you want to follow me on there, it's always linked in the description area. I actually went into my end of 2025 price target for Meta stock here today. Okay. Alrighty, next up here, Monster. I have no opinion on Monster. You know, this is kind of the weaker time period for them, winter time. No real opinion on them. And Monster's a solid, great company. I've owned it in the past, and I owned it back in the day when it was like a game-changing stock, right? And made some ridiculous gains on Monster way back in the day. We're talking like 10 plus years ago. Nowadays, Monster's just a consistent beast company, and I use it as a hedge for Celsius, right? Which is a stock I've been buying here recently, and we'll talk about Celsius in just a moment. Tesla, my Tesla. Alrighty, here's the deal in regards to Tesla. It's been nasty. I mean, you look at the past 4 quarters, and what do we see? They've missed at least revenue or earnings per share every quarter of the last 4 quarters. That's a 4 for 4 in the wrong direction, right? Messy. There's no debating that. No. Additionally, as far as this quarter goes, next quarter, it's so hard for me to project Tesla right now because there's so many moving parts with this one, no pun intended, that I actually don't even feel comfortable doing an earnings per share prediction or a revenue prediction. And that's very different because I can tell you in past years, I always had a lot of confidence when Tesla was going to report their earnings per share, the revenue, like it's going to be around roughly this number. And I was usually pretty dang accurate as far as that goes. Right now, I just don't have, I've got to be honest with you, I don't have any confidence whatsoever in modeling out or predicting short-term numbers in regards to Tesla. I just don't right now. But let me be very clear. The numbers are irrelevant to Tesla in the short term. If if it was about the numbers, Tesla wouldn't be trading $400 plus right now. The company's had at least one miss in the past 4 quarters, right? So if it was just about the numbers, I can tell you this stock would not be trading $400 plus right now. It would not. It's all about the conference call. What does Elon have to say about robo-taxis and getting those babies out there this year? What does Elon have to say about Optimus? What does Elon have to say about the energy side of the business? That's what it's all about. The conference call. This is a stock running on the future right now. And sometimes Tesla goes through these periods where it's very focused on the short term. Certainly 2022 was one of those time periods, right? Very focused on the short term, and even the beginning of 2023. What are the numbers, the projection? Right now, people aren't paying attention to that, right? We've been in a risk-on market for 2 years. A lot of people are excited about Elon and the future and America and robots and AI and self-driving vehicles. And so they're just willing to pay huge premiums for a company that's in the forefront of a lot of those technologies. And so the conference call is what ends up mattering. And so if you're wondering, is Tesla stock going back under 400 after earnings, or is it heading up toward 500? It's all going to be dependent upon that conference call. If investors love the conference call and they walk away feeling jacked up about all these big opportunities, the stock will hold well. If people walk away from that conference call and they're like, I don't know, man, I don't know about the future of Tesla, the stock will go down. It's a freak stock. It's very, there's certain companies that are freak companies. Tesla's one of those where people are willing to look past the short-term numbers and say, I'm investing this because of this next 20-year opportunity. That's Tesla. Most companies don't have that liberty. When I say, it's a freak company, I'm talking about they're one of maybe 5 or 10 companies in the entire world that have the liberty to have the investor base not really focus on the short-term numbers and be like, we're going to do this massive thing, and people say, let's go. I want to own the stock because of this massive thing we're going after. That's $1 trillion opportunity, whatever it is, right? And that's Tesla, right? And so, I hold my 1,000 shares in the public account. I got a position in the Patreon portfolio. But at the end of the day, I hold Tesla shares a lot of times nowadays just because of, I'm just like, what if it happens? Like, what if they are the biggest robotaxi player in the world and that's some massive profit? And what if they are the leading robot company? it's much more of a bet on that nowadays for me to hold those shares than it was back in the day. Back in the day when I was buying Tesla stock heavily in like 2018, 2019, there was a bet on numbers. There was a bet on math. There was a bet on valuation. And that's why I invested so heavily in Tesla stock, and I call my house the house that Tesla built, right? And it was game-changing stock, incredible. But it was a very different bet back then. It was on numbers and math. Nowadays, people are not placing bets on math, really, in my opinion, in regards to Tesla. They're placing bets on, excitement and hope and what it could be in the future. And we'll see, right? But you can't even run math right now because we don't have things to run math on. You can't run math on like let's say you can't run math on robots. Like you just can't. You can't run math when there's a product that's not even in the market, and we don't even know what the demand will be or won't be. When I was running my math back in the day on Tesla, and it was such an incredible investment opportunity, that was because we had cars in the market. And so I was able to run numbers and say, okay, if we can make this much off each car and then increase some margins to this, and average selling price would be this, and we do this number, right? And I go in the energy business, and I'm like, okay, if this business could be valued at this because we do this number, because we had actual products out there. These products that people are trying to throw numbers at right now, we don't even have them in the market. Like robotaxi's not even in the market, right? Robots aren't in the market and won't be for a long time. And when that does happen, we can't run numbers because we don't even have anything to go off of right now. So it's like it's a whole different ballgame in regards to good old Tesla, my Tesla, and but it treated me well, man. And the amount of profits I've taken on that stock over the last number of years, jeez, crazy, right?